Well, welcome everybody to our monthly edition of the Subscribers Only Dividend Confidential webinar. Glad you could all join me today. We got a really good turnout, which is good. I'm sure there's a lot of questions on your part, and we'll make sure to answer them all today. But before we really get started here, I want to see if you guys can hear me okay, and if you can see my screen. If you can just shoot me a yes on both. That yes, you can see the screen. It should say "Welcome to the Subscribers Only Dividend Confidential webinar." And if you can hear me, let me know. Obviously, if you can hear me, you know what I'm asking. So again, Maria, thanks. Anybody else, please let me know. I want to make sure everybody's on board with this and that you can hear me, because I'm doing this for you guys, and this is for you, and this is part of your service. So I want to make sure everybody can hear me okay, and that we're good to go. Okay, thanks everybody. I see Joanne and Jen and John and Tony and Thomas. Joseph, thanks a lot. I appreciate you guys getting back to me. So let's go ahead and get started here. I mean, what we're going to cover today is really it's an instructional webinar to let you guys know what we do, how we do it, what the procedures are, and what to expect. So it gets you up to speed a lot quicker, I think, than reading our special reports, which addresses the same thing. But this way, it's more one-on-one. You can see things visually. You can hear me explain it. So, okay, let's go ahead and get started. Again, so here's what we're going to do. In the next 60 minutes, here's what you're going to learn. You're going to learn the dividend confidential strategies for trading these large special dividends. You'll notice in the marketing webinar, we'll refer to them as Liberty checks, but that's our word for special dividends because we've named them Liberty checks because they've kind of been liberated by some of the excuse me, tax changes that have occurred over the past year or so. So anyways, that's where Liberty checks comes from. Liberty checks are special dividends. We want to make sure we're on the same page with that. And let me go ahead and tell you a bit about myself here, if I can get the scrolling right. I'm the editor of Dividend Confidential. I'm a CFA charter holder. I've got 25 years, really approaching 30 now, managing, writing, and advising on investment matters, mostly focused on income investing. In my world, income investing is investing. Everything else is a speculation. And what we're trying to do is really invest around these large dividends. So, okay, let's go ahead and get into it. What are special dividends? Again, let's go ahead and get this terminology right. I think this is important. I know that some people are a little bit confused about this, but special dividends are Liberty checks. We'll use them interchangeably, but keep in mind that these are special dividends. Now let's address what special dividends are. These are unique dividend payments related to an unanticipated special event around the company. It could be a strong earning report, a business reorganization, excuse me, a large settlement, anything that really improves the cash flow of the business, which can really be an impetus for this for these Liberty check payments, for these special dividend payments. And a large a change in the tax law, a significant change in the tax law that occurred last year has really been an impetus and motivated a lot of companies to pay special dividends. Now, why the term Liberty check? Again, why we came up with that. Again, this is kind of relates to the corporate income tax code. It was where corporate income tax rates were dropped to 21% from 35%. In addition, it was a repatriation U.S. tax holiday, Section 965 of the new tax law. And this all occurred early last year, took place. But this really freed up, hence the term Liberty, a lot of cash on the balance sheets of a lot of companies. I mean, a lot of companies have been reporting record earnings. They've been able to retain a lot more earnings because of their lower tax bill. Now, why do companies pay these special dividends? Well, they do it for a number of reasons. One is to remove extra cash from the balance sheet. Too much cash, like too much of any asset, is an inefficient thing. It's really a bad thing. And by removing excess cash, you're able to keep returns on invested capital high. And this is important for attracting investors, rewards shareholders without incurring a long-term commitment. I mean, a lot of companies just don't want to raise their regular dividend because the last thing you want to do is have to retract that if anything goes wrong. You want to be sure when you raise the dividend that you can sustain that higher rate going forward. So instead of taking on that long-term commitment, what they'll do is they'll pay out these special dividends to reward shareholders immediately. Again, and it benefits the shareholders obviously because you're getting cash, and we all want that. It's income, and of course, it benefits a lot of the insiders who are frequently large shareholders. Okay, why do special dividends matter? Why do they really matter to us? Well, for us, what they do, they can really be a powerful signaling mechanism about the company's future. A company, you just don't do this on a whim. You don't do it haphazardly. You want to frequently send a signal to the market that, hey, we're doing better than many people think we're doing. And this is really a signal to you to show that we are doing it, that we can afford to pay these. And we came about this really, how we discovered this was through one of our sister publications, High Yield Wealth. What we discovered is that when companies would pay out, have a really large unexpected increase in their regular dividend, you would get uh, a positive reaction from investors that would bid the price higher, and that would frequently be sustained. And in subsequent research, we found this frequently happened with companies that pay these special dividends too. And this helps us predict future share price appreciation when it's from the right company. And it creates a unique trading opportunity for us, a unique profit trading opportunity. Okay, so how do these special dividends work? Well, special dividends are similar to regular dividends. You have the same dividend date. You have the declaration date, the ex-dividend date, the record date, and the payment date. And again, these are all the same as regular dividends in that regard. And here's the way they fall in chronological order. We have the declaration date, and this works again the same for regular dividends and for special dividends. You have the ex-dividend date, and this is an important date for us. That's the date that the shares trade without the dividend, and that date is set by the stock exchange. And this occurs a business day before the record date, and the record date again would be one business day after the ex-dividend date, and then we have the payment date. And as you know, these dates do matter, especially the ex-dividend date and the payment date. I'll show you in a minute how these relate. But first, I want to go show you there is an exception to this. Sometimes when you have an exceptionally large dividend, it could be 25 or more of the market price when the dividend is declared. The stock exchange will institute some different rules, and they do this to accommodate the options market because it really throws things through a funk when you have these really large dividends. So we saw this with, if you've been with us for a while, we saw this with Warrior Met Coal, one of our special dividend trades. It declared $11.21 per share special dividend back in November. The special dividend produced a yield in excess of 41%. This is back in November 2017, actually, in yield of 41%. So what happened here was that the ex-dividend date was moved to the end of the row. It was moved to the payment date. Now, you might wonder, how can you have it after the payment date? Well, what happens is the shares will trade with something called a due bill, which means if you sell before the ex-dividend date, you're legally obligated to disgorge that dividend if it somehow was credited to your account to the rightful owner. So always keep this in mind. The ex-dividend date is really the date to focus on if you're interested in collecting a dividend, not just a special dividend, but any dividend. If you buy a stock before the ex-dividend date and hold it into the ex-dividend date, so say in this example right here, say you bought on the 23rd and held it to the market open at the on the ex-dividend date, the 24th, you would be due that dividend. It works this way for everything, for all dividend payers. To collect the dividend, you have to own the stock going into the ex-dividend date. So that's really the important date. That's the date you really want to focus on if you want to capture a dividend. You own that stock at the open, before the open of the ex-dividend date, and you own it at the open. You will collect that dividend even if you sell that on the ex-dividend date. So always keep that in mind. That's really the date to focus on if you want to collect a dividend, whether regular or special. Now, how we do it, we have two trading opportunities. We have the dividend income trade and the capital gains trade. During our webinar, we'll focus basically on the dividend income trade, but there really are two trades that we have. It's a dividend income trade and a capital gains trade where we focus a dividend that centers on a dividend income trade centers on the special dividend. The capital gains trade doesn't include a dividend. You don't get a dividend with that trade. Excuse me. It focuses on just getting capital gains here. So let's go ahead and go through an example here. And the dividend income trade, here, we'll focus on that one first. What we do, we try to buy the stock within 24 hours when the special dividend is declared. Usually these dividends, and it's been I think about every one since we started over 2 years ago, 2.5 years ago, that they're declared after the market close or before the market open. Rarely are they declared, and it hasn't happened with us, during the market trading. It's usually after the market closes or before the market opens. Anyway, here's what we'll do. We'll hold the stock. And what happens once that happens, and I go ahead and deem it as appropriate for us as a trade, I'll send out an alert, and usually you'll get it before the market open. That's what our goal, and I think just about all of them work that way. So before the market open, you'll have the dividend alert in hand, and you decide whether you want to act on it. And then what we want to do, we want to hold. If you do decide to act on it, what we'll do, we'll hold the stock through the ex-dividend date when the price is adjusted lower by the special dividend. We'll collect the dividend. We'll continue to hold the stock in anticipation of a price recovery, which we expect within 3 to 12 months. Then we profit with the combination of the special dividend and share price appreciation. And let me show you this with a with a graphic form so you can see it. I think sometimes it works better when you can see it as a graph. And with this example, we have, and I'll focus on one of our earlier trades, which was Tribune Media. What they did, they declared a $5.77 special dividend. We got a buy alert out. We were able to secure a 15.9% yield on that dividend. I sent out, of course, the buy alert, and then day before the ex-dividend date, that set our target sell price. I'll get into that a little bit more here, just a little bit here. Tribune shares traded up to hit our target sell price, and then a sell alert was sent. We locked it all in. Yeah, I know this is all words here. When you see it in a graph, it becomes much more clear. So here we have it in graphic form. This is the dividend income trade. This is with Tribune Media. So what happened around here, if you can see my clicker, my pointer, is that the dividend was declared. I sent out a buy alert. And then what happens, we hit a high here, the buy, but the way it works out now, we used to do it just, the sell price was right before the ex-dividend date, which is the way it worked here for Tribune Media. We subsequently changed that. So what happens here? On the ex-dividend date, the share price is adjusted lower by the dividend, in this case, the 577 Tribune special dividend. So what we do, excuse me, I'm sorry, fighting through a cold here, so excuse me for having to clear my throat from time to time. So what we have the $36.25 is what we got in at. Our target sell price was $36.25. This is the way it worked. Subsequently, the way we would do it now, if we had to do this all over again, we'd set it closer to 38 here. We'd now take the peak between the dividend declaration date and the ex-dividend date, and this sets our target sell price at this peak right here. That's how it works in the future. It didn't work out that way for Tribune Media, but that's the way it works in the future. That's how we get the target sell price. Is everybody on board with me so far and understands this? So if you are, just go ahead and say yes. If not, I'll go ahead and I'll repeat it, and I'll reiterate what I try to clarify what I'm saying. So here we are at the beginning. We get a declaration, we get a target sell price, we have the adjustment, we collect the dividend. So obviously you see this drop here. That's done by the stock exchange. That sets the price lower to adjust for the dividend. And now here's what we do: collect the dividend, and now we hold in anticipation of a share price recovery. Is what we've got here. Okay, so we got in here, buy alert sent here. We have our target sell price set in this area now right here, 36.25 in this instance. We collect that dividend. We do experience a share price drop. Now we hold for the anticipated share price recovery, and this is what happened with Tribune Media. Again, is everybody on board? This is how we do. This is the basics of the dividend income trade here, okay? So I want everybody to understand this. This is what we do. This is the nuts and bolts of it. So here's how it worked out with Tribune Media's dividend income trade. We collected the $5.77 per share special dividend, 36 this was on a $36.25 per share investment, a 15.9% holding period return. Our holding period was 58 days, equivalent annualized return, and that's if we could do this, flip this over every 50, excuse me, 58 days per year. That gives us an equivalent annualized return of 101.8%. So that's how we get that. And now here we go to the capital gains trade. I'll tell you what. Let me go ahead and go past the text here and go right to the chart. Here's how it worked for us. So here we are, January 11th. This is when it was adjusted lower by the price was adjusted lower by the stock exchange for that $5.77 special dividend on Tribune Media. So you don't collect the dividend. You get in on the ex-dividend date or later. So we usually try to get on the ex-dividend date, and this is what happened here. We were able to get in around $29.90. That was about the median price there on January 11th. That was the ex-dividend date for Tribune Media. And it's all straightforward here. This is the way we, this is all there is to it. We have the our entry price right here on the ex-dividend date or later. You could even have got in a few days later at an even better price than that, but it worked out for us. You never know if it's going to dip down like this. Sometimes it does, sometimes it doesn't. So straight shot. We get in, get out, get in here, get out there. That's how it works. And here's what happened. Now, does everybody understand the way this is, the capital gains trade? You don't get the dividend. It's simple. You're getting in after the dividend, and you're in it just for capital gains with no dividend. Okay? So I want to make sure everybody understands that. Now, here's how it worked with Tribune Media. We have the $29.90 entry price, $36.25 sell price, and the sell price for both trades are going to be the same. Target sell price is going to be the same for the capital gains trade and for the dividend income trade. We have a 21.2% holding period return here, 50-day holding period. The capital gains trade is always going to be less than the dividend income trade because we get in after the ex-dividend date. We had an equivalent annualized return of 157.7%. So let me do one more example, and we'll get into your questions here. This is another example that shows you it's a smaller dividend, special dividend, but it can be just as lucrative or nearly as lucrative as these large dividend payments as the one with with Tribune Media. Camden Property Trust declared a $4.25 per share special dividend. This was back in September 2016. A buy alert was sent. We were able to get in at around $48.50. It traded up to $87.70. That set our target sell price. It was before the ex-dividend date. This was a really quick turnaround. We were able to hit our target sell price in September, just 2 weeks later. So let me go ahead and do the graphic for him again. This is what I think helps explain it. Okay. Camden Property Trust. We got in here right near the declaration date when dividend was declared. That's when the press release was sent out by Camden Property Trust. So we got in at around $84.50 right here. Our buy price for the dividend income trade. Our target sell price, which is near the high before the ex-dividend date, and that's how this will work from here on out. The target sell price is going to be the high between the buy date and the ex-dividend date. So keep that in mind. If you're wondering, the target sell price will be the high point between the declaration date and the ex-dividend date. I see a couple questions on that. That's how the target sell price is set. It's set at the high between declaration date and the ex-dividend date. It's this area in here. When we get in, the high between when we get in and when the price is adjusted lower by the ex-dividend date. Okay, so here we had that same thing. We had this big run up here. We had the share price was adjusted lower by the special dividend by the stock exchange. 2 weeks later, it hit our target sell price. A sell alert was sent, and we're out. So a buy alert would be sent here. A sell alert would be sent here. So, and keep in mind, I'm the one who keeps track of this. I send the buy alerts out. I send the sell alerts out when they hit our target sell price. I send updates up to you. You would have received an update right here, right before the ex-dividend date to know that the we were about ready to hit the ex-dividend date, and that the opportunity to buy this was shortly to pass. Okay, so here's what we had. We had $4.25 per share special dividend. We had $3.20 per share price appreciation that had a holding period return of 8.8%. We turned this around in only two weeks, this is one of our quickest trades. I think it is our quickest trade ever. They're not going to, rarely are they this short, a 229% equivalent annualized return. Okay, the Camden property capital gains trade. Again, we've got all these numbers here. Let's go right to the graph, guys, and we'll go ahead and do it here. So on the ex-dividend date, the price was adjusted lower by that $4.25 special dividend. We got in at a median price. It was around $83. Again, this is all we had. Just, excuse me, pure capital gains right here. Hit our target sell price, and there we are. We're out. No dividend was collected. This thing was turned around in about a week. 83 in, 87.70 out. So here's what we had. 83 our entry price, 87.70 our sell price, $4.70 realized gain on an $83 investment, 5.5% holding period return, but it was only 6 days. If you put that on an equivalent annualized basis, you're close to 370%. And again, that annualized return is just if we could theoretically turn this over every 6 days. If it were an annualized basis, that's where the annualized return comes from. So, okay, I'm sure this is a question that's on a lot of people's minds. Which is the better trade, the dividend income trade or the capital gains trade? I can't know ahead of time which one's going to work out, which one's going to be the more profitable one. I can't know that ahead of time. It depends on the dividend size, on share price appreciation between the dividend declaration date and the ex-dividend date. It's on the length of holding period. Time preference for you. Do you want to have more income or shorter holding period? If time is of the essence, you might want to go with capital gains trade. If income is of the essence, you might want to go with the dividend income trade. But again, I can't know ahead of time which one's going to work out better when we actually close this thing out. Now, let me go ahead and mention one more thing too. Neglect here. Let's go back here. The way this would work out too, and this works out. We also have a stop loss price, and the stop loss price is going to be the same for both trades. And the stop loss is set for every one of our trades. It's on the buy price of the capital gains trade. So in this case, it would have been, it's set 20% below the buy price. So in this instance here with Camden Property Trust, the target sell price would have been around $66. That would have been 20% below this price. And that'll be the same for both trades too. You know, hopefully we don't have to use the target or the stop loss price, but it's fair if it somehow dipped that low. It would be, but that's how that's set. It's always set 20% below the our entry price on a capital gains trade. So in case you're wondering about that, I think I do note it in our updates, but yeah, in case you're wondering how that works. So let's go ahead and jump forward here. Here's our record to date so far. We've closed 36 dividend income trades. Success rate, what's been going on, we've had a couple that haven't worked out. We've kind of hit a little bit of a bum streak. It's dropped we were as high as 86%. Remember, we're dealing with large numbers here. We're looking to get our success rate up to over 80%. We did down to 72 on this, but I expect that to improve. Average yield on our closed trades has been 13%. Average holding period has been about 96 days. That's between by the time we opened the trade on average to when we closed, it's 96 days. Average equivalent annualized return has been about 58.8%. As for the capital gains trades, we've closed 37. We've actually had one that was just a capital gains trade. We're about a 67% success rate, 85 days is the average holding period. Equivalent annualized returns have been about 61%. Okay, here's what we have currently standing. Park Electrochemical is the only open dividend income trade we have now. You can still get in this trade. It's open until the close of trading tomorrow, Friday. In fact, I'll be sending out an update tomorrow morning, a reminder to let everybody know this is the last day. And then the dividend income trade that opens on this on Monday, because that's the ex-dividend date for Park Electrochemical. So that's our only dividend income trade. Right now we have, I believe, 9 or 8 open capital gains trades: United Fire Group, SB Manufacturing, AmeriSafe, Diamond Hill Investment Group, Gorman Rupp. These are all listed. If you go to the portfolio section, you'll be able to find these in the portfolio section. So they're all listed there. Park Electrochemical, the capital gains trade on that opens on Monday, February 5th. And let's look at, what do I look at? Why did most of the special dividend declarations that cross my desk, I ignore. I don't go with. I won't say I ignore them. I don't offer a buy alert because they simply don't meet our criteria. Many of them simply don't have enough dividend yield for us to even consider them. Financially, they might not have sufficient liquidity. Fundamentally, they might be unsound. They won't have the dividend to pay it. They might have to borrow excess cash. They don't have positive free cash flow. The capital structure is shaky. They might not have insiders with the game, but we look for all these positive: high dividend yield, sufficient liquidity, cash to pay the dividend. We want positive free cash flow, positive operating cash flow, sound financial structure. We don't want to have a lot of debt. We want to have reasonable debt to equity. We want to have insiders with skin in the game, a growing business and a bright outlook. We want to have these dividends paid from a position of strength, not weakness. The bottom line is quality first, everything else second. And we can take only what the market gives us. We're not on a schedule. Most special dividends, they're almost out of the blue type occurrences. Yes, there are certain companies which are watch lists, which I'll get into a minute here. There'll be a pattern. They'll recur from year to year, maybe every 2 years. They'll cycle through. But the vast majority of these really come out of the blue. Companies will find themselves in a very good financial position, at least for the ones we'll trade, and they'll announce these. They'll declare these special dividends. That's the way it works. They're most of them, the vast majority, aren't planned ahead of time. This is why I have to continually monitor. This is why I'm in tune. I'm tapped into all the wire services. This is why I monitor the market closely for these, because I don't know when they're going to come. Okay, now here's a watch list. This is something I get quite a few questions on, what it is and how it works. So we have roughly 20 now stocks on our watch list. This top part, these are reoccurring ones that we've seen. I just started accumulating these, after they have a history of paying special dividends. The bottom section of this are ones who have kind of hinted. Berkshire is kind of an outlier. I know they've never said that Warren Buffett's not keen on paying dividends. But Warren Buffett's done a lot of things in the recent past that he said he would never do. I mean, he's actually, he's split Berkshire shares. He's issued low price shares. He's changed he's kind of, I guess, incorporated, stuff that normal corporations do that Berkshire hadn't done in the past. And the fact that they have so much cash on hand, I think as the time goes by and they don't have an opportunity to put that to work, I can see them paying a one-time dividend. Don't know if it'll be this year, but I can see it happening in Buffett's lifespan. So that's the way that works. There's no guarantee that once one pays a dividend or declares one, that it's going to be upgraded to a special dividend. It's possible that it may not be updated to a special dividend trade because the dividend may not be large enough. Usually, the single reason why that they're infrequently upgraded to a special dividend. But here's the thing: if you have a more speculative bent, you might want to try to get in ahead of time, because what happens when a special dividend is declared, you'll frequently see a spike up in price, and that's a little bit extra gain for you if you're able to get in before it's declared. There's no guarantee, but that's why I said if you're a bit of a more speculator, and that's why I've accumulated this list. I've done it basically for some of the speculators among, excuse me, who want to maybe kind of gain the dividend a little bit more. Okay. Now I'm going to put the ball in your court. Uh, Let me go ahead and run through some of the questions here. If you've got a question, by all means, type it in. I'll answer to the best of my ability. Uh, David, you're asking a question over what period of time? I don't know what you mean. You need to be a little more specific. I don't know what you mean by over what period of time. Jillian's asking this. We're separate. Jillian's asking me if this works with pot stocks or other stocks. No, this is just with special dividend payers. That's our bailiwick here. I'm not involved with some of the other ones. With the other services, I do high yield wealth and personal wealth advisor, Millionaires Retirement Club. I'm involved with that, but the pot stocks I'm not involved with. Nancy's asking me the 8-point strategy again. I'll go back through that. Here's something else, guys. When we're done here, this will be posted on the website too. So if you want to go back and take a look at anything that we've talked about, you'll be able to get on the website and go back and take a look at this. Okay, I've got one from David. We're assuming that there will be, I'll go back here to one of our trades. We're assuming that there will be a recovery. Yes, that's part of our analysis. We try to do the ones, there's no guarantee. Remember, we're dealing with stocks here. I can't guarantee that they're going to come back, but it's through our research have showed, and over quite a few number of trades, we have seen the odds are on our favor that we will see a price recovery with the better special dividends, like right here. Now, of course, I can't know ahead of time if this is going to happen, but based on our fundamental analysis, we expect it to happen. That's why we get into this trade. We look for a price recovery in this dividend. Once we've captured the dividend, we look for a subsequent share price recovery. And our research has showed that over many trades, that does frequently occur. So that's how we get into that. I can't guarantee it, but that's what our trading strategy is predicated on. Let me go ahead and go through. Again, guys, I'm going through this. So if you have any more questions, by all means, type them in. And if I've overlooked something, but there's a chance I may have missed it. And if I missed something, go ahead and type it in. I'll be sure to answer it. So if I'm missing anything, Shirley's got a question about taxes. The IRS. Yeah, there's something. In case you're wondering, if you're dealing this, there's something called qualified dividends. And here's something else we can't know. I can't know ahead of time if the dividend is going to be qualified. And what that means is that if you hold a stock, it's like 61 days around. I know this is kind of convoluted, but there is a special rule when it comes to dividends. You'll see it with, say Microsoft pays a dividend or Apple or somebody like that. They're usually qualified. And that means you need to hold the stock for 61 days around the ex-dividend date. And then if it's in a taxable account, it'll qualify for the lower capital gains tax rate. Well, for most people, that's 15%. But with our special dividends, a lot of times they're a composition of more than just earnings or income, which usually means a dividend is going to be qualified. They can be a combination of earnings, capital gains, return of capital. So I can't always know what the tax implications of this is going to be ahead of time. If you're trading within a retirement account, a 401k, a Roth IRA or a traditional IRA, I mean, that's not going to be an issue. I've got one from Versay, covered calls. Versay, we do nothing with covered calls. And so we don't do any call strategies. We want to keep it simple. We don't do strategy. We don't do any option strategies. We don't overlay options over it. We don't do anything with leverage. That just adds a whole level of complexity that many people are uncomfortable with. If you're if you're into options, that's something you're going to have to do on your own because we don't do anything in that regard with this. So I can't really say, uh, what's going to happen. So yeah, when it comes to covered calls or anything with options, we don't overlay any other strategy on that. So it can get kind of tricky, especially when it comes to with dividends involved, how the bid ask spreads on options change, how the price changes when a dividend, large dividend. So you have to, uh, yeah, it's something we don't get into. I'm not the dividend expert here. That's Andy Crowder's purview. So I stay away from options for us. Yes, David's asking, do we look at the big picture? Do we take in the more macro events such as Fed monetary policy or interest rate policy? Yeah, we do look at the overall market, but here's the thing: we're really though on a micro basis. We look at the fundamentals. I can't really have any control. Yeah, yeah, you do have to look at it within the overall uh, big picture of what's going on in the market. But if you have solid fundamentals, which is what we follow, what we try to focus on, uh, I mean, that's really our focus. And dividend stocks in general tend to be less volatile than the overall market, the non-dividend paying stocks. So we really want to focus on the fundamentals. And you don't know when market sentiment's going to return. If you're looking at maybe a downtrending market, you don't know what market sentiment's going to turn. I mean, consider what happened in December. We had really a strong sell-off in stocks, but we had a quick snapback in January. The S&P and 500 and the Dow Jones Industrial Average are going to post their strongest gain in almost 30 years in just this January. So, yeah, we look at the big picture, but we're really focused on company fundamentals. And we found out if we keep doing this time and again that the right companies and when sentiment changes and hits, which it generally does because the bias of the market is really to rise. So, we're a long only strategy, and that seems to work, especially with these dividend stocks over the long term. So, David, I hope that answered your question. If I'm missing anything, guys, again, type in. There's a chance I may have missed something here. So, do a bunch of questions. Jillian's asking about stocks that are OTC, over-the-counter stocks. We haven't. I don't believe we don't have a history of doing that with. And by the way, over-the-counter stocks are stocks that don't trade on the Nasdaq or the New York Stock Exchange. They trade over the counter. They're not listed, and you can tell these apart from other stocks. They usually have 5 letters in their stock symbol. So where Apple, is a Nasdaq traded stock, and its symbol is AAPL. If you see something traded on the New York Stock Exchange or the Nasdaq Exchange, it's usually going to be 3 or 4 letters. An OTC stock, they're nearly always 5. So you might see something like if Apple were over the counter, it might be AAPLY. There's usually another letter that signals that that's a over the counter stock. We haven't done with that. I can't say that we wouldn't trade an over the counter stock if it's the right one. We could. So if you do have issues with your your account trading over the counter stocks, you might not be able to trade that stock. I've never had any issues with my account buying and selling over the counter stocks. The only difference is that I have to place my orders. And I have bought over the counter stocks for my own personal account. You do have to trade them with limit orders. They don't, at least through my broker, which is TD Ameritrade, my personal broker. And this isn't endorsing TD Ameritrade. I imagine the other ones work the same way. But you have to enter it as a market or limit order instead of a market order for over-the-counter stocks. But then again, we haven't done it yet. So Jillian, hopefully I answered your question there. Let's see who else. Am I missing any? Let me go ahead and scroll through. I'm trying to multitask here, which I tend not to be very good at. Joanne again is asking about options, calls. No, we don't do any strategy with calls again. So I just wanted to go ahead and set that straight. David Saskin, RFP. That's Resolution Forest Products. They had a hard sell, and sometimes it works out this way. We had that hit our one that hit our stop loss price. I don't know what happened today with Resolute Forest Products, David. Since we closed that out, I've stopped following it. Uh, that's an interesting comp. I thought that would work out for us. That trade, they were really turning things around. And Resolute Forest Products is actually a stock that I have experiences with. That was one of our trades at Personal Wealth Advisor. And it wasn't a dividend trade. It was just a contrarian turnaround trade. And that turned out very well for them. Unfortunately, they kind of backtracked a bit. And I didn't expect that to happen because they had reported sound financial results when they declared their special dividend. And I guess they may have sold off today. This is what you might be referring to, David. I think they may have disappointed with their latest quarterly earnings. I'm not sure why they sold off today. Jillian, to saying, well, BMO, I'm not familiar with them. They charge a hefty fee for trades outside their account. Again, if I can't offer information for any individual firm. I'm not sure what the trading with your individual broker, what rules it might implement. I simply don't know enough about them. I imagine if you're in the United States, I think they're pretty standardized. If you have a TD, Ameritrade account, or a Charles Schwab, I imagine there's not too much difference in Fidelity. The rules are probably pretty much the same all the way through. John, yes, I sent alerts before. Matter of fact, you're going to be getting an alert tomorrow on Park Electrochemical, our latest trade, since that's getting ready to trade ex-dividend. And then after that, the ex-dividend date, I'll send another update with all the trade numbers, what the target sell price is, what the stop loss price is, what our goals are, what our for the capital gains trade and for the dividend income trade. So yes, I keep you apprised of all that stuff. So okay, David's asking me one about the special dividend and Liberty check. They're the same thing. There is no difference here. We go back. A special dividend is a Liberty check. A Liberty check is a special dividend. Liberty check is a term of our own coinage. It's one that we use to describe special dividends in our marketing webinars. The reason we came up with that is because we saw special dividends being liberated. We've seen a profusion of them since there was a change in the tax law. We've seen a ramp up in the number of special dividends. So again, special dividend is Liberty check. And here's something else. Liberty voucher is simply the shares on which those special dividends are paid. So that's how that works. Keep that in mind. Special dividend equals Liberty check. Liberty voucher equals the common shares of the company. Ron is asking if I look at the chart. I'll look at a price chart of what's going on with our recommendations. But again, we're focused on the fundamentals. Is this a fundamentally sound company? How are they trending? Are sales growing? If it's a growing company, the price chart's generally going to be trending in an up direction anyway. Not all the time, but frequently it will. But here's the thing. Again, we're looking at that signaling mechanism of the special dividend that's saying, hey, guys, we're doing good here. Things are going well for us. So that's what we're looking. We're looking at fundamentals. Can we see a recovery? You can't extrapolate things indefinitely. I mean, I'm not a technician, if that's what you're thinking. I do look at price charts. I do look at other maybe more technical features, but we're not doing technical analysis here. We are based on the fundamentals. Scott Saskin is a Park Electrochemical trade, still worthwhile. You get in now. We have seen quite a bit of run up in the price since our initial buy alert was sent earlier this month. You still get a high dividend. It's not going to be as high as it was. It could still turn out. I can't say if it will. it's not as advantageous as it was 30 days ago, but this still looks like a decent trade from our perspective. We still like this stock, which is why we still recommend it. I sent out a recommendation yesterday, and we still recommend this as a dividend income trade. Okay, guys, any more questions? Joe's asking, what percentage have hit our stop loss? We've had about 25% we've had so far that have hit our stop loss, Joe. Again, we've kind of gone through a little bit of a down streak when we had some of the market sell off. Uh, there were things sometimes we kind of had we hit a bad streak because we had some things that kind of went wrong against us. We had some Chinese stocks, some really good ones. China Ushell International was a specific one, a very good, strong company. Unfortunately, what happened, we had a ramp up in the trade war with the U.S. and China between Trump and whatever the guy, the name of the guy, the head guy over the Chinese Communist Party. That's been kind of an ongoing thing. The good news, that's kind of ramped back a bit. Sometimes we get hit with things that are simply beyond our control. But going forward, I do like a lot of our stocks. I do expect to close most of them at a profit. I do expect our percentage to return to where it was a year ago. We were above 80 instead of just above 70. I like our open trades right now. Rhonda, I'm not sure. I don't have that in front of me. With the Rhonda's asking what was our entry price for the Park Electrochemical trade. That would be on our website under the portfolio tab. I don't have that readily in front of me right now, so I can't say what it was. I'm kind of drawing a blank on what we got in at, but it is listed on the website what our entry price, our official entry price, which we use. I know a lot of people will get in after the fact, but we use the one when the initial buy alert. That's just for our record keeping. Prices for some people will change. People will either get in at a higher or lower price, and that will show. But that's how we set our buy prices based on for our tracking, for our record keeping. It's the price that was most prevalent on the or it was the median price on the day that the alert was sent. Anything else? Any more questions? I'm going through. I mean, if I missed it, it's not something I've done on purpose. So that's why if I have overlooked your questions, by all means, write it again. And then again, you can always write to me too. You can, my email address is steve.mosey, steve.mosey at wyattresearch.com. So if something comes up after this, a question that occurs to you after we're done, you can always email me and I'll answer your question. But yeah, so if you want to write to me, it's steve.mosey at wyattresearch.com. So, and again, this is going to be posted when we're done. So if you want to go back and take a look at re-examine this presentation, this webinar, you can see it. We'll have it within the next hour after we're done. Scott's asking, how do we come up with the target sell price? I'll go back to that. The target sell price will be the high price here between the ex-dividend date and the target sell price. It won't be absolute high all the time, but we set it around that high, and we'll usually round it up or down just to make it, a number that people can relate to if they want to set it in with their broker. Because I know some people will set that as a price in case it comes up with they're not at the computers, or with the targets. The same thing with the target sell price. So it's going to be a high price between the declaration date and the ex-dividend date. That's how we set the target sell price. Anybody else? Any more questions? Joe, thank you for the props. Just thanking me for the presentation. He's got something out of it. I hope everybody else has too. Is there any more questions? Anything else on your mind? Again, you can always email me, and I'll be sure to answer your questions. Should something come up later. Anything else? I'm willing to stay as long as you guys are. So if you do have a question, I'll be more than happy to answer it. I don't see anything new coming through. Jillian, thank you. Jillian says she's got a better understanding of what we do, and that's the point of this. This is for you guys. I want to make. I know sometimes people aren't really sure, and even after reading the special reports, how we do what we do, and why we do what we do, and hopefully now you have a better understanding. I know, for me, this is probably easier than reading the special reports. I mean, you get to see these graphs here, and it's really quite simple. The dividend income and the capital gains trade when you're able to see what we do and have a better understanding. So anybody else? I'll tell you what, I'll count down here. 5, 4, 3, 2, 1. And Scott gets in here. Scott's asking me, how do we set our stop losses? Again, here's how we set the stop loss. The stop loss will be set 20% below the entry price on the capital gains trade. So after the price has been adjusted lower by the dividend, okay, here, after the price has been adjusted lower, we hit 577 here, back to the dividend income trade on Tribune. So we would set the price 20% below our entry price for the capital gains trade. So in this instance, 20% below 29.90 would be basically 24 bucks. Okay? That's how I get. It's 20% below the entry price of the capital gains trade. That's how that's set. And oh yeah, Glenn's asking a good question here. Should we get the stop loss on the ex-dividend date? Yes. What'll happen? Park Electrochemical is going to be a good example here. Here's what you're going to get: an update from me, a buy alert tomorrow, saying, "Hey, this is the last day to get in on the Park Electrochemicals dividend income trade if you want to collect its special dividend." So you'll get an alert from me on that. Then what's going to happen after the ex-dividend date, which will be February 4th? You'll get an update from me where I'll have all the dates set. We'll have all the dates and all the numbers set for both the dividend income trade and the capital gains trade on Park Electrochemical. But that's the way it works for all our trade. So you'll have all those numbers in front of you, and it's going to be updated too on the website, on the spreadsheet that we have for all our open recommendations. So hopefully that comes through good. And John saying, eagerly awaiting for the next special dividend alert. So am I. John, I know what happens. These things can hit, boom, 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 one right after another. Sometimes there can be a little bit of a waiting period. I know in December and November, we had one just about every week. It's kind of lulled off a little bit here unexpectedly. I was expecting a few more trades, but I think we're going to see a pickup, I think, in this as earnings start to roll in. And yeah, we usually see a pickup in February and March, the first quarter of the year. So yes, I look forward to more too. David's got one. Here's another one too. Is price a limit on our trades? No. And David's issue, and you might have some issues with this too. I know some people have issues with the higher priced recommendations, and I'm thinking maybe Diamond Hill Investment Group and Investors Title were two recent ones that were priced over $100. I know a lot. It can be a stretch. You don't have to buy in $100 or 100 share lots if you don't want. If you feel, look here, if you feel uncomfortable with any of the trades, obviously don't do it. And if budget's a problem, then I don't know what to say but we don't have a dollar limit. If the right special dividend trade is priced above 100, I mean, we're going to go with it. So we don't have a limit when it comes to price. Okay. Shirley's got a question again with the IRS and the dividend income, the rules when it comes to qualified dividends. Shirley, this really I can't really answer that here because it's too convoluted and saying it in words. If you want to email me, by all means email me and I'll send you out a written. If anybody else has got the question too about qualified dividends, email me. If I can type it out for you, because it takes about a paragraph to see it, how it works. And for me to sit there and talk about it, I think it's going to be more confusing than anything. And if you want to write to me about that, I'll send you an instructions, or I'll send you a description of what it means to be a qualified dividend and to qualify for the lowest capital gains rate and what the IRS rules are. I don't want to really delve into that here because I think it's too convoluted and it's too long. So anybody else, again, any more questions? No, again, you can go back and review this if you want to refresh your memory with anything. And again, you can email me. So keep that in mind. But since I don't see any more questions coming up, I'll tell you what, we've been here, about an hour? And yeah, I hope you guys got a lot out of this. I hope you really understand what we do and you have a better understanding. And the more you understand, the more comfortable you feel with trading these. That's been my experience. So again, I want to thank everybody for showing up. So I appreciate everybody attending today. We've had very, very good attendance. So again, I appreciate everybody for attending, and hopefully I answered all your questions. I do have one more here from Scott. Are you better trading this in an IRA account? Scott, I can't give you anybody advice on this. I don't know what your tax situation is, so I can't say whether it's better for you to trade through an IRA or through a regular taxed account. So anyway, so that's it. Thanks, everybody. Again, you can see this online. So have a good rest of your day. I appreciate this. So I'll talk to you all later. Take care. Have a good afternoon.